Hello, good afternoon, and welcome to HYCM's webinar, FX Week Ahead, live market analysis with myself, Giles Cochran. We're going to be looking at what's coming up at the week. And just before we get going, please could you just let me know if you can hear me okay on the webinar panel. If you could just put in the question mark in the question area, just let me know if you can hear me okay. Let's just see who we've got here. Oh yeah, thanks Sahel, thanks Nadir. Hi Ahmed, hi Catherine, hi Raj, Ramesh, Sahel, Van, Rico, great, yeah. Oh, that's great to have you. I'm glad I'm coming through loud and clear. Okay, super. That's great. Okay, I was going to show you the quick disclaimer, just to remind you that as we're looking at the different market situations, that the whole purpose of this webinar is education. It's to show you what sort of things you should be looking at in the market. It's to give you an understanding of why the market is moving the way that it is, but it's not trading advice. It's education to help you make your own trading decisions. So there's just a disclaimer. I just need to run through that before we start. Very good. And we're going to look at the week ahead. And before we look at the week ahead, we always know we have to look back. Before you can look forward, you look back. And last week, there was a little twist that came out of the Federal Reserve on Friday that affected the US dollar. I'll just show you the US dollar index chart. Now, the dollar index chart is all the accumulated dollar positions put into one chart, and I'll just show you that here. Dollar index, because you guys don't have it on your demo. What you see here on the dollar index chart is you see there was this key level up here, that 97 level, and you see price at the end of last week tried to break above that level, but then it was sold down. Okay, so you can see that the dollar is currently being sold, and the reason the dollar's being sold is because at the end of last week, a couple of Federal Reserve members came out and they started to say that they were concerned about global growth. Now, this is a theme that's starting to appear in the market, and it's a theme that people like the IMF, the World Bank, I looked at a couple of their reports, and they're predicting that global growth is set to slow down next year. And so you're starting to see that thinking is coming into the Federal Reserve thinking. So the Federal Reserve is obviously the world's largest and most influential central bank. And so the market's currently pricing in one interest rate hike for the end of this year in December for the Federal Reserve, and 3 for 2019. So the concern was that the Federal Reserve becoming conscious of slowing global growth meant that the dollar was sold. So that's why we're seeing some strength in currencies against the US dollar, and it's because of this reason. So that's something just to be aware of. So start looking for that theme, and you'll start seeing any concerns about global growth. It was a couple of Federal Reserve members who said it. There was a non-voting Federal Reserve member who said that he was concerned, a guy called Patrick Harker, and he was concerned. And he said he wouldn't support a December rate hike. So there's a little bit of a question mark now over some of those comments that have been made. That's been weighing on the US dollar from Friday, and we're seeing that is still the case in the market today. And here's the US dollar index, and you can see it's down to 96.42, and that 97 level was a very key technical level, and you can see that price is being sold off quite heavily as a result of those dovish comments from the Federal Reserve. So at the moment, we're seeing some US dollar weakness. Now, remember, from a seasonal perspective, November is a great month for the US dollar seasonally. Okay, so the last 10 years, dollar index has increased an average of 1.46%. This chart I showed you here, that's the dollar index chart. Okay, so seasonally, in the last 10 years, the dollar index increased an average of 1.46%, and it's climbed in 8 out of the 10 last years, particularly strong against the euro, New Zealand dollar, Swiss franc, and Japanese yen. Okay, and we're not seeing that at the moment. So if I show you the the US dollar Japanese yen chart. Sorry about that. Yeah, this is it. So no, that's not. That's the pound dollar. We'll come on to that chart at the moment. So let's go to the dollar yen. I just pulled this up for us earlier. Yeah, so this is what we saw. We're seeing some weakness against the dollar yen. And usually we're seeing strength in November. So the point to really register is that that impact from the Federal Reserve is now flowing through in the markets. We're seeing some dollar weakness. So now we need to look carefully at Federal Reserve members when they're speaking or giving us speeches. Do they mention about this concern about global growth? Okay, that is a key market theme. It's come from Friday. It's here on Monday. Watch it and see what else happens in concerning the US dollar strength. Okay. Now, I've gone through the dollar index. Yeah, I showed you the chart. I just wanted to point this out to you. See, that was that key technical level. I was watching this for the last couple of weeks. I've been watching this level, and we're starting to see some definite selling off of that dollar index. And that does indicate that if we get a bearish close here on the weekly chart, then we're looking at moving down towards that 100 exponential moving average, which is the blue line here. Okay, guys, don't forget, if you've got any questions, just do type them in. And if there's anything you don't understand, just let me know, because I really want you guys to understand and embrace what's happening here. Okay, the next thing, now I call this Theresa May's smile and wave Brexit plan. Okay, now I was covering the US session last week, and when I was covering it, the Brexit coverage was relentless. And it's been quite curious to see Theresa May's approach, and I'm calling it the Smile and Wave Brexit plan. And that's based upon the children's cartoon Madagascar. And you know, you've got those funny penguins. I don't know if you've ever seen it. And they say, smile and wave, boys, smile and wave. And it's this idea of just smiling and waving when things are going terribly wrong for someone. And I feel that Theresa May is doing exactly that same approach, because Theresa May has a problem. She has got a deal with the European Union, and they've agreed a deal. Okay, so far so good. That agreed deal has to now be passed through UK Parliament. The problem Theresa May has is that a number of people who have seen the deal now say that it's not the kind of deal that we want to be signing. So Theresa May now has a Brexit deal that she will bring to Parliament, and Parliament is almost certainly going to not accept her deal, because Theresa May doesn't have enough of a majority in order to get people in the UK Parliament to vote for the deal. And even those of her own party are not convinced that she's got the best deal. And that group is called the hard Brexiteers. Now, on top of that, some of the hard Brexiteers, people like Boris Johnson and Jacob Rees-Mogg, have decided that they are considering issuing a vote of no confidence for Theresa May. Now, in order to issue a vote of no confidence, you have to have 48 names that are submitted to a certain committee within the Conservative Party called the 1922 Committee, and that triggers a leadership confidence vote. Then Theresa May has to secure 150 votes. Now, the situation is expected that she would not be ousted if a vote of no confidence is triggered. All the expectations is she does have enough support. And if a vote of no confidence is triggered, it can't be re-triggered again for another year. So what Theresa May is now doing is she hasn't got the full confidence of her party to vote the Brexit deal through. But at the same time, there's not enough people opposed to her to completely oust her. So she's just sort of heading towards this parliamentary vote that's almost certainly going to be rejected. So I can only see this being very bearish for the pound. I just can't see really much way that Theresa May is going to be able to pull this off. It seems an almost impossible problem, and she just seems to be smiling and waving into an almost disastrous vote. I have enormous respect for Theresa May. She's a fantastic Prime Minister and doing an amazing job in a very difficult situation. But it's hard to see where this perspective is going to go. So if we look at the price chart, we can see some of the impact on the pound. Let me just call up the pound US dollar chart. Now, okay, here we go. Now, okay, so we've been seeing a number of rejections of the 100 exponential moving average. Okay, we had a rejection there, we had a rejection there, and then there was a bit of a consolidation of price action on the Friday, which is this candle here. Now, there's been a series of kind of news triggers. Now, if we just pull out, zoom out a little bit more, we can see we've got a rejection of the 100 moving average here, 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 and here. We've got a downward trend line there. All technically, prices is falling to the downside. We've also got a hidden bearish divergence on the RSI indicator. We've got a higher high, and we've got a lower low, and price is moving to the downside. So price looks like it's going to fall technically into this region, the 1.2, 500, 400, 300, and obviously we've got longer term weekly lows down here. So, you know, a sensible place, if you're of the inclination that Theresa May won't be able to get this Brexit deal through, then a stop can be placed above the 100 and the 50 exponential moving average, playing down to the lows here. The problem is the risk reward is not so great here, but traders can look to go short on this pair. I went short on this pair this morning as price went into the 100 exponential moving average. So I was looking at the exponential moving average here, and when price rallied up to the 100 exponential moving average, it touched here and here, and it was there that I entered a short just there. I had my stop above the high, and I've played it down to the lows. I'm looking, I've moved my stop to break even, and I'm looking for here. But look, over the next week, okay, I do think there is headline risk with this pair. In other words, a headline can come out and the price can move in a very quick, volatile way, similar to what happened here. But I think that the slant of the news will be bearish for the pound. So looking at key technical places to enter, looking at the 100, 200 exponential moving average, 50 exponential moving average, and look for price, how it moves off those areas for really good potential entries for short. I am biased to the short side. I just can't see how Theresa May can pull it off, and I can't see how the parliamentary vote is not going to be rejected. And in the next couple of days, I'm expecting, maybe even tonight, I'm expecting a vote of no confidence to be triggered against Theresa May, in which case we're going to see the pound sell off instantly. So there's a lot of negative risk for the pound. So looking at the key technical places to enter. Now that is not trading advice. It's simply education. That's a sort of situation you want to be looking at. This is a politically charged situation. Theresa May has to get this vote through Parliament. Will it happen? Not sure. We'll have to see. Okay. Another key thing is the oil charts at the moment. There's a lot of volatility in the oil charts, and all's been sold off in a series of weeks. We may have to look at this in more detail some other time, but simply to say that OPEC is meant to meet in early December, and they've been talking about reducing their production and agreeing to cut production as an organization. And if obviously there's less supply of oil in the market, you'd expect oil to rise. There's one criteria that I need to make you aware of here that's maybe slightly more complex, is that the oil prices have been falling. I'll just show you. Let's have a look if I can. I'll show you oil, US crude. Okay, so oil's been falling. This is the weekly chart. Okay, you can see it's been falling 1, 2, 3, 4, 5, 6 weeks. It's falling hard. It is to do with less supply, but it's also to do with weaker demand. In other words, this is that global growth situation I was talking to you about. Do you remember how people are expecting the global growth to reduce? Well, because global growth is reducing the GDP, they're also expecting 2019 global oil demand growth to slow as well. Okay, so the fall in oil prices is due to those couple of things. It's not only an oversupply in the market, but it's also weaker demand. And that is why we've seen such a strong move in oil. So just to be careful that when OPEC meet and agree to agree to production cuts, you need to factor that in also with weaker and slowing global demand. So that's why I'm reluctant to go long oil. Whereas you might think with OPEC meeting in 2-3 weeks, they're going to produce cuts. This would be a good time to go long oil. No, it isn't, because you've got that global oil demand factor in. So you've got to be careful there. Okay. Other thing is just last Friday, it seems to be Trump's favorite days. He talked about wanting to resolve the US-China trade war. He says the US wants to make a deal on trade. It's not acceptable yet. The US may not have to impose further tariffs on China. So the US will hopefully make a deal on trade, not acceptable yet. Trump says China's trade list is pretty complete. And yeah, so what Trump was saying on Friday was he was quite optimistic about the relationship between the US and China. He was making warm sounds that there's going to be a deal. Now, I was in the market at the time, and I was just here when I saw on the Reuters feed those comments come in, and I bought here very low down at 112.65, 170, and price rallied instantly up to the just beneath the 100 exponential moving average on the 5-minute chart. So when I saw that, the US dollar Japanese yen was bid strongly, and I was hoping for more. However, then the White House came out and said, no, don't read too much into what Trump's saying. There's no sign of a deal coming soon. Okay, and that meant quite quickly after those comments, the price reversed to the downside. That's why it didn't just carry on thing. But it's just a good reminder, isn't it? Look, Trump, if he does resolve the US-China trade war, this is what was expected to see, appreciating US dollar, and also expecting to see the appreciation in the S&P 500, which is what we did see. Here you see the S&P 500, that's the blue line. Trump made that tweet just around 5:30 GMT time on Friday, 16th of November, and the price rallied. But look, the Chinese ETF rallied much more than the S&P 500, and that stands to reason because China is seen to be more vulnerable in a US-China trade war than the US. So there was a greater rally from China's ETFs. So that's just to let you know, okay, if I start seeing Donald Trump saying that there's going to be resolving a trade war, then look, US dollar is bid against the yen, and the S&P 500 is bid, and China ETF is bid. So that's pretty much what's expected to happen. And it's just, in a way, it's just nice to see that happening. So if we see Donald doing anything similar, or you see anything coming out on the feeds, or you suddenly see a US-China trade war getting resolved, you know which way to look to go long on those pairs and those situations. Okay, so that's a little look at what's happened last week. There's quite a lot, and those things are having an impact in the market, and you need to be aware of them. The next thing for us to look at is to look at the week ahead. So we'll go along to our calendar, and we'll open it up and see what we've got coming up. So coming up for this week, we've got quite a slow day on Monday. We have some Euro members meetings. We've got this Euro group meeting. Now that's of some significance for us today because we have the Italian budget problem. And just to remind ourselves with the Italian budget problem, this is weighing heavily on the euro. The euro is being sold at the moment out of concerns of Italy and Brexit. The Italian concerns is that Italy has submitted a budget deficit, and that budget deficit is greater than the EU allows. So there's been some argumentation between Italy and the Eurozone. Will Italy submit a better budget? Will they be more cooperative with the Eurozone, or will they not? And that's what the market's factoring in at the moment. The market is quite bearish on the euro. Now, if we remind ourselves, what we're seeing at the moment is we're seeing US dollar weakness. So when we go to the Euro US dollar chart, let's see if that's, where is it? I'll just pull it up, Euro US dollar. We'll just call it up fresh again, okay? So Euro US dollar chart window. We'll go to chart, template. There we go. So here we go. So on the daily chart, we're seeing the euro is recovering a little bit against the US dollar. Remember, the US dollar is weak, okay? And because the US dollar is weak, we have the euro appreciating against it. But we know in the backdrop, the euro is weak as well because of the Italy problems and the Brexit problems. So this rally, we should look for opportunities to sell. And you can see that some traders have taken this opportunity here on this trend line. And they've sold against this trend line. You can use stops above the 50 exponential moving average. So look at places, look at the daily chart to move against the 50, 100 exponential moving average, and look for opportunities to go short. We should be bearish the euro because of the Italian budget problems. Okay, so that just shows that to you. And we're seeing a little bit of strength in the euro at the moment, but longer term, we want to be selling those rallies. Look for technical places to enter short here, 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 that trend line there, and you can also draw a Fibonacci retracement on, and you can see that a sensible place to go short would be, again, the 50% Fibonacci retracement, stops above the 100, and again the 61.8, which stops above the high for a longer swing trade. Okay, there's a few technical places where it's sensible to enter. Carrying on with the week ahead. There's not much really happening on Monday. We've got the FOMC, Federal Reserve Member Williams speech, so keep an eye on that. Listen out for signs of slowing growth. Okay. Tuesday, we've got the RBA meeting minutes. Now, the RBA, they should be delivering an upbeat tone. That's what we're expecting, because the RBA's upwardly revised their GDP, they've upwardly revised their inflation, and they've downwardly revised unemployment rates in the quarterly statement released soon after the November board meeting. Okay, so in other words, they were quite optimistic in November, and the domestic data since the last November board meeting has been good. There's been some good employment report, and there's been a lift in annual wage growth. So expect to see some good signs from the Reserve Bank of Australia. And remember, though, that the thing against them is that they slow wage growth and global risks. That's what they're going to be labouring about. And you can just see the Australian dollar has been appreciating quite considerably recently. You can see that this strong Australian dollar has been bid. We're now approaching a key kind of level on the daily chart. We're approaching the 200 exponential moving average, so key technical places. And what you're going to do is on Tuesday, we have a workshop, and I'll be looking at what the Reserve Bank of Australia said on Tuesday, and that which is tomorrow, and we'll be looking at, are there any actionable trades that can be taken, and how should we interpret what they've been saying. So we'll be looking at that in some detail tomorrow on Tuesday. And if you haven't joined us on one of the workshops, please do. They're really great opportunities, and I'm sure you get a lot from them. Got Carney speaking, not expecting anything necessarily. He's just going to keep talking about Brexit risk, but obviously one to be aware of. On Wednesday, we have quite a slow day with not much of any significance to be coming out at all. We've got crude oil stocks change, which is worth just looking at in terms of the supply and inventories for the US crude oil market. Obviously, that will affect the oil. ECB monetary policy meeting accounts, not expecting that to be moving the markets in any shape nor form. The interesting data point that we do have coming out is on Friday. We've got two lots. We've got this whole swathe of European PMI manufacturing surveys. These are surveys of leading businesses. Just hang on, just checking. Okay. No, Ahmed, we don't provide, so just a question here, Ahmed, no, we don't provide daily signals. The provision of this is to provide people to know how to trade for themselves. It's educating to help you understand how a professional trader views the market, and so you can start to see the skills that you need to develop and work on. And we do go to those in more detail in the workshop. This is mainly a look ahead as to what significant impact there is in the market of upcoming data events and what's influencing the market right now. Ahmed, I hope that answers your question, Ahmed. Thank you. Yeah, okay, good. I'll carry on. It's these swathe of European surveys. These are manufacturing surveys of Italy, Germany, the Eurozone, and what they're really asking is how confident are these significant business leaders in their manufacturing? Are they expecting to take on more workers? Have orders increased? You know, what is their likely projection? If the number's above 50, that's good. Below than 50, it's sort of bad. So we've been seeing a slowdown in euro growth. Okay, that's been one of the major themes. So the market's going to be looking at this PMI data to see, is that carrying on? Are we still going to see this downside risk to growth? Is that still there, or are we going to see a bounce back from the weak third quarter performance that the Eurozone had? I'm expecting more weakness. That's what the market's expecting. So obviously, if there's strength indicated, that's going to be counter to what the market's expecting, and you can expect the euro to appreciate. We also have some Canadian data out now. One of the key releases is the Consumer Price Index. Now, Canada's been doing really well recently, and this CPI data out last month was a bit of a surprise. It was minus 0.1%, and that was a surprise to the downside. It's expected to be something like 0.3, 0.4% this time, so that is not expected to be repeated. But so look at this CPI data, because if that's bad again, that's going to weigh on the Canadian dollar. Okay, and the CPI year on year is expected to be 2.2%, and the Bank of Canada's target is 2%. So that's expected to be okay. So what we're expecting is an okay indication for the Canadian dollar. Don't forget with the Canadian dollar that the Canadian dollar is closely correlated to US crude oil prices. So whenever you're looking at trading the Canadian dollar, you must also be aware of what's happening with oil. So you need to factor in any trades you take with the Canadian dollar, what's oil doing, what's the price of oil, is it appreciating, what's the reasons behind that appreciation. It will affect Canadian dollar. This is one to look at on Friday. You want to definitely be going in, because if there's a deviation, say there's another big deviation of more than 0.3% or 0.4%, you're going to see a big move in the Canadian dollar, and that's the kind of move you want to enter on a retrace. So this is something to look at on Friday. Come in, have a look, see what the data is, and that'll give you some indications of what to do when it comes, and we may be able to cover some of that on the well, it's the sort of thing we'll be covering on the Tuesday. We'll be looking at other opportunities and showing you how to trade surprise news releases, and I'll be giving some tips and indications how to do that. Yeah, obviously this is the Chinese economy slowing down due to the trade war. Just to remind yourself that China economy is slowing, global growth is set to slow. We're seeing those themes. Workshops, running them tomorrow, 1 p.m. GMT every Tuesday. That's live market intraday analysis. So we'll be looking at what's happening right now, and then we'll be looking at how do we enter the market, where do we put entries, where do we put our stops, where do we put our targets, how do we what do we risk, what currency pairs should we be trading. It's really a practical time, and it's not a time I encourage you to give me some feedback, okay, and that's what I really want to see from you guys. Interest rate report, no, there's no interest report this week, Idrisu. The only thing that I would say is with the only interest rate things we factored in that you need to be aware of is the US Federal Reserve's interest rates. It's expected to hike interest rates in December. But those expectations went down a little bit after the Federal Reserve members were a little bit more pessimistic about global growth, but they're still there. The market is expecting the Federal Reserve to hike next month and then 3 times in 2019. Okay, so this is the Leveling Up with HYCM tomorrow at 1 o'clock, at 2 o'clock. If you haven't joined yet, please do. We also offer a raffle. So if you attend the trading workshop, and you have to actually be at the workshop, so you can't listen to a recording, but if you actually attend the workshop, we will be holding a raffle for all those who've attended, and one person will get an hour webinar with myself, and I will have one-to-one coaching with that person who wins the competition. So that's, a really good opportunity. If you've got any burning questions or something you're really personally struggling with, I can help you and give you the direction and help you to know where you should be focusing on. So that is the end of our week ahead. Please do come back this time, same time, same place, Monday, 12:30 to 1 GMT on the 26th of November, and we'll see what's coming for the week ahead. Don't forget the things that I've mentioned this week. Look at them. Look at that extended theme of US dollar weakness. Does it carry on? Do the Federal Reserve speakers echo about slowing global growth? What does the Eurozone say about the Eurozone growth, those PMIs on Friday? Don't forget the Canadian data that's released on Friday. And we have core US durable goods out on Wednesday as well. That will be factored into whether the US economy is still growing. Okay, guys, thank you very much for listening. I hope you have a good week, and I look forward to seeing some of you. Oh, please can I repeat? Yeah, Idrisu, sure, I can repeat my announcement. My announcement was very simply that the online trading workshop happens tomorrow at 1 to 2 o'clock GMT. And for those people who attend the workshop, is those who actually attend the workshop, there will be a free raffle. And the winner of those raffles will win 1 hour's one-to-one coaching with myself. But you have to attend the workshop in order to enter the raffle, and it will be one winner each month. So if you attend the workshop during the month, you get entered into that raffle. So you, as the saying goes, you have to be in to win. So be good to see you tomorrow. And of course, we get to look at a lot of practical things tomorrow. How to place your entries. What currency pairs should I trade? How do I know what currency pairs to trade? We'll be looking through all those, and there will be a handout that you can take with you. And how do you register? Okay, yeah, you register. I think you have to go to the HYCM's website. Could you just jot down your email address, and I can send that. I can get that sent over to you. So just pop your email address down, and then we can make sure that you can register for tomorrow's webinar. Okay. Okay. I'll just give you a few minutes to see if you want to either contact HYCM support, or just leave your email here, and okay, that's great, thank you. I've got your email. I'm just going to make a copy of that, and there'll be something in your email telling you details of how to register. Okay, guys, thank you very much for listening. I hope you all have a good week, and I look forward to seeing as many of you as I can on Thursday. Hi, and so goodbye to you, Blondie, Kathy, Emily, Haroon, Jasu, Matthew, Nadir, Quaval, Raj, Ramesh, Sahal, and all the others. Thank you very much for attending, and I look forward to seeing some of you tomorrow, and if not, next week. Thanks then. Bye.